The platform enablers were the ones that made the money during San Francisco's gold rush in the 1800s, right? The picks, the shovels, the pans, and the pants were sold by them, correct? It is the birthplace of Levi Strauss. Today, Nvidia is the analogy that is comparable. Let's return to the topic of Nvidia. You should be smiling broadly since, after all, you own it. Do you think this is illogical, or does it make perfect sense? No. I don't want to repeat myself, but reaching $3 trillion on an intrinsic value basis is quite difficult. However, Nvidia would be the business to choose if you were creating the ideal momentum company from the ground up. You have a compelling story, a CEO who doesn't stray from it, and they've set the stage so they can meet short-term goals. Additionally, there is a market that adds to the mix. Considering that Nvidia is the leading pick and shovel provider, I believe you are witnessing one of the greatest momentum plays in history. The question then becomes, what will we make with these picks and shovels? Will we discover gold? Furthermore, the question seems ambiguous to me. Where can we find that gold? Will it be on the inside of a startup or a large IT company? If you look at how these resources are being used in big tech, the economic value of large models is being utterly destroyed. That, in my opinion, is excellent for all subsequent ventures. What am I trying to say here? We were all completely enamored with ChatGPT and GPT in general. Looking at the quality of Llama and Llama 2, these large corporations have essentially decided to make all these models very good, very useful, and very, very free. The value of that category is being economically destroyed and subsidized by the large amount of resources going there. Startups will benefit from that. What will you subsequently construct on top of these nearly free tools is the question. Computational biology is a topic that I have been studying for some time. In the footage you mentioned, I believe I was discussing with Orzi the possibility of computing vast, intricate environments using less data. Today, it's a tremendously challenging endeavor, but soon, you can practically characterize every possible molecule permutation in an AI model that you can train. You can comprehend protein folding if you combine that with a program like AlphaFold. All of a sudden, you can begin assembling instruments that, in theory, may provide you with much more accurate suggestions for certain substances that might truly treat illness. A business that I founded with a few others is an alternative to it. It's more in the realm of material science. I tweeted about it. There, we've made some significant progress. The main goal is to create next-generation battery materials, and if it works, we have one possibility that may be quite revolutionary. There are some encouraging indications, but we don't yet know. Some of these green sprouts are present. From my vantage point, a large portion of Nvidia's current revenue is wisely spent because it will go to the larger players, including Tesla and big tech. With it, they will subsequently develop some truly fundamental platform technologies, such as Dojo, FSD, or the entire Tesla platform that integrates cameras, inference, and training for all types of physical world interaction. Over the coming years, all of that stuff, whether it's Llama 2 or something else, will be released to the ecosystem for free or almost free. That, in my opinion, will be a very significant event that will give rise to hundreds of new businesses doing incredibly creative and innovative things. The major breakthrough firm has not yet materialized. The big players, in my opinion, are currently receiving the most of this capex, but the startups that are launched within the next 4 or 5 years will benefit from all of their hard work. According to this asterisk, the information asterisk story, they are requesting that suppliers replace the server racks for Blackwell because they are overheating. To what extent does that worry you? I'm not particularly concerned about it. You see, this happened to Nvidia approximately 5 months ago. Nvidia has a reputation for making fixes quickly, and this specific Blackwell overheating problem has already been fixed. The layout was altered. Thus, Grace Blackwell might be at issue if we're discussing a possible new overheating problem. However, I can categorically state that Jensen is not the type of CEO that consistently makes the same error. I don't think this issue will arise. Jensen was able to resolve the prior issue in less than 2 months, so if it is most likely not a significant one. Does the need for a delay affect the numbers? About a month ago, Jensen did tell CNBC that the desire for Blackwell was insane. That isn't the issue in my opinion. The timing doesn't seem to change at all. I believe Blackwell is prepared to leave. Our tagline, "You have to own Nvidia into the Blackwell ramp," remains true now that Blackwell has been corrected. When Blackwell is ramping, it will be the most prosperous time to possess him. I believe the overheating problem we had with Blackwell has been resolved. We anticipate significant volume in the January quarter and very little volume in the October quarter. That's our perspective on Nvidia. You mentioned that there is a gap exactly here, which is what we should be watching. What can we learn from this gap? Watching the gaps from last week is, I believe, our theme for the week. On Wednesday, we witnessed the overwhelmingly favorable response. These gaps were left behind when the market opened with great strength. We constantly keep an eye on the gaps since it would usually be a setback if the market, the SPDRs, or any particular investment were to rapidly retreat into them. Gaps may indicate whether the upward advance is sustainable. Last week, SPY in particular saw an almost 5% rally, which was a really spectacular move with strong upward follow-through. It has a strong chance of maintaining that margin, but in order to maintain the breakout this week, it must. Okay, at least in the pre-market at the moment, we're witnessing a great deal of excitement. Whether technology takes us in the correct route, we'll have to wait and see. Right now, I want to go somewhere else. I intend to clear the charts once more. I see why you enjoy doing this, Katie. It's a lot of fun. Now let's look at the VIX chart. Overbought and oversold conditions will be examined. From here and then from around here. I think the overbought is the top line and the oversold is the bottom line. What does that teach us? What do these charts tell us? The VIX is quite fascinating. There is now a fairly distinct trading range. Support at about 15 and resistance at about 22 to 23 enclose that range. We would suggest that the high volatility cycle that started in July is still in place within that range. The market may be able to continue rising if the 15 area, which is the lower limit of that range, were to be broken more forcefully. Naturally, that would indicate that a cycle of decreasing volatility has resumed. You would anticipate some consolidation if the VIX was in an oversold state close to that support, which would cause it to begin moving sideways before seeing an oversold bounce. After that, you could extrapolate that to the S&P 500, with which it has an inverse relationship, and anticipate a consolidation and decline in the S&P. The only question is how dramatic that will be. Okay, Katie, I'd like to move on to another stock. Every trader I speak with has the newest Dow component and frequently discusses it. Here, we were practically CNBC Nvidia. Naturally, I'm referring to Nvidia here. I'll display the chart right here. The 100-day moving average may be seen right here. The purplish line is this one. The goldish line is the 200-day. You can see an area of resistance right here. What can you infer about this trade and this stock from that? Nvidia is exhibiting what is known as testing resistance. On a 9% surge last week, the 141 level was convincingly cleared. In our work, a breakthrough is still seeking confirmation this week. If Nvidia closes above that level on Friday, the breakout will be confirmed as a bullish development. The measured move price target from that breakout would be roughly 157. This is more of an intermediate-term goal, albeit it may be a bit conservative in the long run. We would wait for that confirmation for two reasons. First, we want to watch Nvidia this week because, like anything else, it has that gap. Second, based on our charts and indicators, a short-term countertrend signal is probably present today. Additionally, there is now a respectable spread to support, which is about 134 for Nvidia. In order to feel more confident about the positive follow-through for Nvidia, we truly want to see that validation. The original meaning and structure have been maintained while any grammatical errors have been fixed.